They call him the man who broke the Bank of England, the orchestrator of economic chaos, the architect of financial massacres. For 28 years, he's been waiting, hidden in plain sight. While the world forgot, he never put down his sniper rifle. He was just waiting for the perfect shot. A fraction of a second too early, and the prey scatters. All that work wasted. And now, after decades of patient, predatory silence, he's finally pulled the trigger. What does this mean for you? It's a meticulously calculated death warrant. If you still don't grasp the gravity of what's coming, if you're blindly buying any American assets, stocks, bonds, even just holding on to the US dollar, then you are actively walking into a financial hurricane. You're confronting the master manipulators. You're fighting an organization led by George Soros himself. Specifically, this time, Soros has set his sights on Elon Musk. Hello, wealth warriors. Elon Musk's Tesla stock has been brutally shorted, plummeting by 55%. What is shorting? Simple. You usually buy low, sell high. Shorting is the opposite. You borrow Tesla stock, sell it at $100. You now have $100 cash. When Tesla drops to $50, you buy it back. You return the borrowed stock, pocketing the $50 profit minus a small interest fee. If the stock goes up, you lose. If it doesn't go up, you still lose because you're paying interest. That's how we short. So why did Elon Musk himself recently claim Tesla's crash was due to malicious short selling by a Soros-led group? What does this mean? Step 1. Mind manipulation. Soros controls a vast media network. In just a few days, 47 reputable news outlets globally unleashed over 3,000 negative stories about Tesla. Tesla sales down 70% in Germany. Sales halved in China and Europe. You woke up, opened your phone, and it was a tidal wave of bad news. Within a week, panic selling for Tesla soared by 178%. How do you manipulate minds? Through media, through news, infiltrating people's beliefs, shattering their trust in Tesla. But that's not enough. People need to see some truth. Step 2. The market hammer. When Tesla's stock price hit its peak, Soros struck. He bought a massive amount of shares, then immediately started dumping them. This sell-off accounted for 18% of Tesla's circulating shares. Imagine he bought up 18% of all Tesla shares and then just relentlessly pounded the sell button, driving the price down. What if you don't own enough shares to short? Easy, you lend them to me. I'll drive the price down, then return them. Don't want to lend? No problem. I don't borrow from you. I borrow from your broker or bank. Because when you buy Tesla stock, it's not really in your hand. It's with your brokerage or bank. I just need to borrow from them. As you watch your Tesla stock plunge, you're forced to consider cutting your losses. If you don't sell, others will. More selling means more drops. Soros keeps selling. The price keeps falling until you're forced to sell. Still won't sell? Okay. Step 3. Physical attack. Dozens of Tesla stores suddenly had their windows smashed for no reason. Tesla charging stations vandalized. How can Tesla do business now? If a company can't operate, why would you hold its stock? But even that wasn't enough. Step 4. The margin call. When Elon Musk bought Twitter, he leveraged 63% of his Tesla shares as collateral for a bank loan. If he'd sold them, Tesla would collapse and he'd lose control. So he collateralized them. But now, with Tesla stock plummeting, the value of Musk's collateral is eroding. Example, you put up $1.1 trillion in stock, get an $800 billion loan. Now, the stock is worth only $800 billion. The bank loaned you the current value. If it drops to $700 billion, the bank loses money. They'll demand you pay back the $800 billion immediately. If you can't, they'll sell your collateral on the open market. So, once Tesla stock hits the bank's red line and Musk can't pay, that collateralized Tesla stock will be dumped. And then the Soros syndicate can buy it back at the absolute bottom, returning it to those they borrowed from. If you think this is just a personal vendetta between Musk and Soros, look again. The entire US stock market is plummeting. If Trump, a figure as massive as Musk, sees his stock dive like this, do you think other stocks will escape? This is a message. Soros, who doesn't easily make moves, has acted, and he's not just targeting Tesla. I'm telling you, this is just the opening salvo of a meticulously planned financial massacre. You'll realize this latest plundering by Soros has chilling parallels to his 1992 takedown of the Bank of England and his 1997 assault on Asian currencies. The only difference, this time, his target isn't other nations, it's the United States itself. You might laugh. Who dares short America? I'll laugh back. The 2008 financial crisis started in the US. America was essentially bankrupt. Banks collapsed. Yet today, America thrives. Why? Because the explosion started in the US, but the deaths weren't in the US. The consequences were borne by the world. The price was paid not by Americans, but by global citizens. And if you don't want to be a victim of this crisis, if you even hope to climb the social ladder during this chaos, then subscribe to my channel. I will continue to give you more insights. And if you're worried you'll listen, then forget wasting your time. Then hit the like button right now. It'll save this video to your playlist, so you can come back anytime to review and act. First, even the Federal Reserve, the ultimate monetary authority, has been losing money for years. The US government is out of cash. US Treasury bonds are unsellable. No one wants to lend America money anymore. On top of that, the US stock market bubble, inflated by AI, is now crashing. US inflation is out of control. Every economic indicator screams recession, yet the Fed refuses to cut interest rates. More importantly, after the pandemic, America's cities are hollowed out. Offices and commercial properties sit vacant. Loan interest rates are sky high, causing property owners to default. Banks are now sitting on mountains of bad debt. Do you understand what this all means? It means the conditions for a malicious short-selling attack are almost perfectly aligned. If you don't understand the full picture now, waiting until the market truly collapses to look back will be too late. Because this script is essentially no different from before. New bottle, same old poison. What does that mean? It means when the gods want to destroy you, they first make you mad. Back then, Southeast Asia was booming, China was making fortunes, asset prices soared, everyone was madly speculating, and that was when the prey was weakest. Soros picked up his sniper rifle and fired 3 shots, igniting the Asian financial crisis. Shot 1. Shorting the Thai stock market. Soros targeted major Thai banks and financial companies. He ordered mass sell-offs of their shares. Simultaneously, the world's most reputable media, even the Thai Central Bank, spread news that Thai financial and housing loan companies were in serious trouble. Result? Panic among the populace, rushing to banks and financial companies to withdraw money. Widespread defaults, and the Thai stock market instantly collapsed. Shot 2. Testing the government. Would the Thai government intervene? If they didn't, the entire Thai economy, stock market, and all assets would collapse. Soros could then buy everything at rock-bottom prices. Most of Thailand's assets would fall into his hands. No need for shot 3. But if the government decided to intervene, they'd have to use national reserves. And this was the moment to fire shot 3. The Thai government used hundreds of billions of US dollars to rescue the economy, trying to stop Soros. But they still didn't realize the gravity of the consequences. Soros immediately launched a full-scale assault, ordering the short selling of the Thai baht, Thailand's national currency. Not only that, he divided his forces, shorting currencies across Southeast Asia, selling vast amounts of regional currencies, then converting to US dollars. He knew that if the Thai baht collapsed, other currencies in Southeast Asia would follow suit. So he expanded the battlefield, launching a full-scale regional assault. All of Southeast Asia was caught in the whirlwind. Indonesia, Philippines, Myanmar, Malaysia, none escaped. The outcome? Everyone remembers. Soros won big, walking away with immense wealth. And all of Southeast Asia's prosperity, assets, and accumulated wealth were stripped bare. Their fixed exchange rate systems were forced to collapse. This means Soros' short-selling strategy had 3 interconnected shots. The first shot was just to open the path for the final one. And now, is that script repeating once again? In my previous videos, I said you'd notice that Buffett and other US capitalists have long been quietly exiting the US market at its peak, holding massive cash reserves. So, who holds US stocks now? Individual investors hold 30% of US stocks. US mutual funds hold about 50%. Many think large financial institutions like mutual funds hold most of the US stock market, but that's not true. 90 to 95% of mutual fund shares are held by individual investors. In other words, 30% of US stock market individual investors buy directly, and another 40 to 50% invest through funds. Plus, foreign investors hold about 10% of US stocks. All told, conservatively, at least 70 to 80% of US stocks are in the hands of individual and foreign investors. So if the US stock market collapses, who takes the hit? Is it capitalists like Buffett, Bill Gates, Zuckerberg, who already sold their US stocks and exited? No. The losers are individual investors and all the money from around the world that poured into the US stock market. So even if this disaster originates in the US, it will be like the 2008 financial crisis. Capitalists will take government bailouts, borrow money at 0% interest from the Fed, and buy cheap US stocks. The ones who suffer are individual investors and the rest of the world. Why did Soros target Tesla for short selling? Many think it's a personal vendetta between Soros, representing the EU, and Elon Musk, representing the US. That might be partly true, but there's a deeper truth. Tesla wasn't just a hot stock when Trump took office. Up until last week, Tesla accounted for nearly 5% of the NASDAQ index. It's also one of the few AI-related stocks that has tangible, real-world potential. We see autonomous driving, smart parking. These are real. Because of this, Tesla attracted countless individual investors. In terms of shorting conditions, if Tesla collapses, it won't just trigger panic selling through herd mentality. It will drag down the entire US stock market and burst the AI bubble. More importantly, Elon Musk himself has recently been selling his own company's shares. Combined with the tactics we discussed earlier, this provides all three elements: timing, location, and human will for a large-scale shorting operation. But what's more terrifying is that Tesla might just be the beginning. Those who still dream of long-term holding to avoid losses probably don't realize that the numbers in their accounts are undergoing surgery without a knife. The world always makes mistakes, but many people are taught from school that they are not allowed to make mistakes. Their money is in pensions, in banks, in stocks. When the market collapses, banks fail, and stocks bleed, they still teach their children, don't make mistakes. If they aren't poor, then who is? Children only learn to walk after falling. To be a pilot, what matters isn't if you know how to fly, but if you know how to handle technical failures. Investing is the same. In a bull market, anyone who blindly buys stocks and holds tight can make money. But in a bear market, in a recession, the most important thing is to distinguish between a bull and a bear market. Will you listen to the street vendor selling knives? I'm telling you, in the stock market, whether you make money doesn't depend on how much potential you think a stock has. What matters is whether there's more money flowing in or more money flowing out. If sellers have stronger cash flow than buyers, no matter how good the stock is, it will go down. In other words, whether the stock market goes up or down is decided by the big players. So we don't need to read financial reports or analyze the economy. We just need to follow the money of the big players. The scariest thing isn't that Soros wants to short US stocks, it's that he holds an ace up his sleeve, 100 times more terrifying. That's the final blow. If we follow historical patterns, the second shot is about to be fired to trigger a US liquidity crisis to force the Federal Reserve to cut interest rates. Soros's genius lies in forcing central banks to open the valve for wealth transfer themselves. What does that mean? As the US continues to face crisis, many individual investors buying mutual funds will hit their stop-loss limits, leading to automatic selling. In 2020, the US stock market plunged so hard it triggered circuit breakers for this very reason. When that happens, ETFs and mutual funds that individual investors buy will see massive withdrawals. Even inactive traders will flee. The US market will completely collapse. At this point, the Fed has only two choices. 1. Stand by and watch the US continue to collapse, with all global capital flowing out of the US, causing the dollar to lose value. 2. Act. Either cut interest rates or print more money to inject liquidity into the market. And in most past financial crises, the Fed has done both, cut rates and printed money simultaneously. So look at the US stock market now. It has fallen severely. The Fed itself has forecast that the US economy will enter a recession, yet they adamantly state they will not cut interest rates. Why? The reason is simple. Cutting rates now won't do anything. You'll notice that in recent years, the Fed has consistently reported losses. Why? Because they bought US government bonds a long time ago, and the average interest rate they receive from these bonds is only about 2.6%. But the interest rate they have to pay banks in recent years has climbed to 4.4%. So, if the Fed cuts interest rates, will their interest costs go down? Will they stop losing money? But they still won't cut rates. Why? Is it really just because of inflation? You'll realize the truth. The Federal Reserve has begun to lose control over the US dollar. In fact, last year, the Fed cut interest rates 3 times in a few months. Logically, if US government bond yields are at 5% and the Fed cuts rates, most people would think rates will fall to 3% or lower. So normally, people would rush to buy US government bonds to lock in that 5% rate, causing bond prices to rise. But in reality, after the September rate cut, bond prices fell. That means fewer people bought US bonds. In other words, when the market no longer obeys the Fed, the rate-cutting trick loses its effect. Currently, US bonds, even with such high interest rates, can't be sold. You can see the value of US government bonds has dropped by almost half in recent years. The US Treasury also doesn't have enough money to spend. If the Fed still insists on cutting interest rates, bond values will continue to plunge, and numerous US banks holding these bonds will go bankrupt. Therefore, at this time, cutting interest rates could become the spark for a new financial crisis. For this very reason, if the Fed wants to cut interest rates, they must also absorb the bonds themselves, meaning expanding their balance sheet and printing money to buy the bonds. In other words, if the Fed chooses that solution, they can only print money. And once they print money, the supply of dollars will surge, and the US dollar will immediately lose value. Do you realize? Whether the Fed saves or doesn't save, the final outcome is only one. The dollar loses value. At this moment, Soros has already prepared the minefield. The third shot can help him profit from the dollar's devaluation. First, Soros could choose to short the dollar. But will he actually do that? I'm not sure, because capitalists like him depend on the US. A dollar collapse might not necessarily benefit them. However, when the dollar loses value, you don't necessarily have to short the dollar to make money. Because when money withdraws from the US, it's highly likely to flow into safe assets like gold. And in recent years, Soros has continuously bought large quantities of gold. By then, the amount of gold he holds will skyrocket in value. And then you'll notice the coincidence. Buffett's earlier investment in the Japanese yen could also yield positive results. Because when US stocks collapse, money is likely to flow back to Japan, driving the yen up. Look at what happened after the 2008 crisis. Gold prices rose 180%, and the yen appreciated nearly 50% against the dollar. That's why I personally invested in gold last year and started shifting into yen at the end of the year. Compared to most people, I reduced my US stock holdings because I felt the profits from US stocks over the past year were sufficient and the dollar was at risk of devaluation. So I converted dollars to gold and yen for hedging. For investors or entrepreneurs, we don't need to predict the exact timing of a US market collapse. The only thing we need to do is prepare for what is most likely to happen. And if it does happen, it's enough if our name is on the list of winners. If it doesn't happen, we won't suffer major losses. At most, we just miss out on some profit. In principle, Buffett is a large investor and we are retail investors, so our strategies and plans won't be identical. But in reality, the investment strategies share similarities. When the third shot is fired, that is also when the great wealth transfer takes place. Try to think, who is the ultimate victim? You might feel this has nothing to do with you, but it's actually very simple. For example, Taiwan's labor insurance fund, Vietnam's national wealth fund, Japan's pension funds, or European insurance funds. All have invested no small amount in the US stock market. At that point, these funds will be forced to cut losses and exit the market. After the 2008 financial crisis, global capital was forced to flow into safe assets, US bonds. So what about this time? Currently, US bonds are not without buyers. But when the crisis hits, will anyone buy them? At the same time, the US will also have to repay its debts to the world. But as the dollar loses value, this debt will actually be eroded. During the 2008 crisis, the US collapsed, but other countries collapsed even more miserably. Who were the winners then? It was the capitalists who had already bet on the yen in gold. They could lock in profits at the peak, then seize the opportunity to acquire assets globally at rock-bottom prices. Additionally, the US also sold off domestic assets. When the crisis erupted, US banks were the first institutions to receive government bailouts. They weren't saved immediately at the start of the crisis, but only after the market had collapsed. But once bailed out, US banks could then use that money to buy assets globally at fire sale prices, from Greek ports to Korean banks. Meanwhile, financial conglomerates like Goldman Sachs and Morgan Stanley not only didn't weaken after the crisis, but grew even stronger, and their monopoly deepened. For Buffett, the period when his assets grew fastest was when he started buying at the bottom during the 2008 crisis. The key takeaway from this video is that from now on, which asset class will appreciate is no longer the most important question. The important question is whether we hold essential assets like gold. Because what we truly want is the cash to deploy when the third shot is fired, when global assets are fire sold, so we can buy in at a bargain. Finally, I think the truth lies here. George Soros is criticized by the world every time he attacks markets and shorts them. But I want to say that whether he shorts or not, the reality is that the US stock market and US bonds currently face significant risks of severe decline, and a financial crisis in the US is inevitable. This issue has always existed. Soros is just the trigger of the crisis, and he is just taking the blame. When the market collapses, you will see Wall Street media begin to inflate the narrative of a Trump-induced recession. Then, Elon Musk continuously lays off employees, causing public discontent, and unemployment rates rise. Some will even blame the Federal Reserve for not cutting interest rates, leading to the collapse of US stocks. But as I've said in previous videos, the collapse of the US stock market is actually beneficial for the financial magnates behind the Fed and even the US government. Therefore, the issue is just finding someone to take responsibility. Soros has never cared about his reputation. He just needs to make money and then withdraw. At the same time, if a short-selling magnate like him acts first, it will encourage many others to follow suit, creating a stronger chain reaction. So, if collapse is inevitable and everyone wants to avoid responsibility, then even if Soros truly ignites this crisis, he is just taking the blame. I've debated whether to say these things, but in the end, I decided to speak out, because I want you to realize one thing. In the flow of capital, there is no good or bad. There are only those who get richer and those who get poorer. The question is, which side do you want to be on? The rich or the poor? Will the upcoming developments unfold as we predict? How will we adjust our strategies? I share free knowledge on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, subscribe to my channel, hit the notification bell, and share this video freely. I sincerely wish all of you who like this video achieve financial freedom soon. If you found even one or two useful insights today that help you live better, I'm content.